Hi everyone, I'm Blake Oliver with Flowcast, and I'm joined today by Alan Tekerlek of JMP Securities. He's a managing director within the investment banking group. We're here at the Devil's Canyon Brewery in San Carlos in advance of our IPO Readiness Forum for controllers and CFOs, and Alan has generously agreed to give us a bit of his time ahead of the panel discussion to talk about what controllers and CFOs need to know about getting ready for an IPO. So Alan, first, thanks so much for joining me today.
You're very welcome. Pleasure to be here.
I was wondering if before we get into the details, you wouldn't mind telling us a little bit about JMP Securities and what you do there.
Sure. JMP Securities is a full-service investment banking firm. We are publicly traded. We are a boutique firm focused on high-growth, high-quality companies, and that takes, we're involved in terms of taking companies public, in terms of raising capital for them, again, either in the public markets or in the private markets, as well as doing M&A advisory or merger and acquisition advisory services.
So when you are advising businesses on going through an IPO,
correct.
I imagine that the CFO role is one of the most important ones. What do you feel makes for an exceptional CFO if I'm looking to hire?
Well, in the context of a company that's going public, probably, as you know, Blake, the most important, next to the CEO, the CFO is probably the most important person within a management team. And why is that? Because the CFO represents really, from the perspective of investors that are going to ultimately be buying in the IPO, that CFO represents the individual that's going to be really telling all, as it relates to the company, to investors as it relates to the financials of a business, which are obviously very important. What's important in terms of a CFO in a public company context, it's really a CFO who has public company experience. It sounds kind of odd, how a CFO needs to have public company experience to be an effective CFO, and it's having that experience gives investors comfort. They want to know that this is an individual who's taken a company public, knows what the issues of being a public company are, and the ability to, in a very transparent manner, convey the financial operations of a company to the investor base on a quarterly basis.
So what do you look for in a CFO and an FP&A team for a company that's going public, given how important that role is? From
an investment banker's perspective, you're looking for a CFO and FP&A team that, one, obviously has experience, has done it before, a CFO that has the ability to convey themselves and the financials of a company very transparently. An issue that's come up over the last several years is making sure that investors feel comfortable that a company and their finance team and their management are being transparent in terms of really what's going on within a company. And a CFO who can convey that transparency and that level of trust is very valuable. I mean, I would say, as I've always say, the CFO within an organization is probably one of the most difficult positions to fill and find.
So unemployment is very low right now. I imagine that experienced CFOs are highly in demand, especially ones who have gone public before.
Correct.
Where do you find this endangered species?
Great question. Interestingly enough, it is probably, as you indicated, a CFO is probably a seasoned public company CFO is probably one of the most difficult positions to fill, particularly within the technology space. And where do you find them? Interestingly enough, where a lot of these positions become available is once a company gets acquired. Interestingly enough, within the software space, which is an area that I focus within, over the last 3 years, there's probably been close to $30 billion, and that's with a B, $1 billion in acquisitions in terms of companies being acquired. And as you would expect, when one company acquires another and they merge, the CFO position of the acquired company is probably one that won't last. So that creates an opportunity. So that person is available to be placed somewhere else. So a lot of the M&A activity creates new CFOs in terms of becoming available for the next CFO position.
Got it. So given your position in the IPO world, I imagine that you've got sort of your finger on the pulse of what's going on in the market. I was wondering if you wouldn't mind sharing the trends that you're seeing as it relates to the IPO.
Right. Interestingly enough, within the technology space, probably one of the biggest trends that we've been seeing, everyone hears about the phrase unicorns, or those companies that have been valued at north of $1 billion. At this point, there's probably close to 250 of those unicorns that are out there. And I would say of those 250, I would say a small handful of them have ultimately gone public in the last few years. There's been a handful that have been acquired, but there still is a huge body of unicorns, if you will, that are still privately held. And so what we're seeing is that ultimately equates into companies going public. A lot of in the case of technology companies, a lot of these private companies have stayed private longer. So there's been a very active private company funding market out there. So companies before used to use the IPO as the mechanism to raise more capital. But because there's so much capital available in the private markets, this enables private companies who are doing well to remain private longer. So the byproduct of that is companies that do go public tend to be more mature, have more scale than what we've seen in the past. And that's probably one of the biggest trends that we're seeing today.
So in other words, if I have this right, we're going to see fewer but bigger IPOs in the future?
I think it's a combination of both. I think you're going to see, as companies get more mature, the fact that there are 250 or so unicorns still sitting out there, at some point they do have to access the public markets or be acquired. The investors who made investments in these companies, they're not in the business of holding, keeping their investments out in companies forever. So at some point, these companies are going to have to make the decision whether to go public or be acquired. And what we're seeing today in 2018 is we're seeing more companies going public than we've seen in the past. So if you were to ask me what's going to happen in terms of the public markets, I would expect more companies to be going public than we've seen in the last few years, and I would expect to see larger IPOs as many of these unicorns decide to go public.
So given these trends, if I'm, say, a startup founder and I'm looking to go public,
right.
Is there a certain target revenue I should be looking for?
Yeah, it's a great question. Interestingly enough, I get that question asked of me all the time from private companies looking to access the public markets. There is no hard, fast number. There is kind of a rule of thumb at this point where people want to see approximately $100 million in recurring annual revenues as kind of the benchmark or the gauge for going public. That tends to be more of a guideline than a rule. Interestingly enough, what we're seeing is companies that do go public tend to be much larger than that, for many of the reasons that I just explained a few minutes ago.
But get to 100 million, you'll probably be okay.
You're probably doing okay. At that point, you have enough scale to be able to access the public markets.
Well, Alan, thank you so much for your insights. I'm really looking forward to the panel discussion later, and hope you have a great time.
Blake, thank you very much.
Thanks.